Swing trading tech stocks is one of the easiest ways to make money in the market if you have a defined system, and I'm super tired of hearing people missing out on it. So today I'm going to tell you guys my exact strategy that's made me way more money than any prop firm ever has, and how I'm able to catch really monster swing trades on tech stocks several times a month and even several times a week in some cases. Let's get right into the video. So my very simple strategy is just called the RFK, range, fakeout, kill shot. Now, it's the same thing conceptually as AMD, accumulation, manipulation, distribution. However, the difference is I don't completely need a fair value gap to validate the entry, okay? And a lot of you guys who've watched my futures trading content, you'll notice that this also looks similar to the STIM model, sweep tap inversion momentum diagrams that I've created in the past. And once again, this model works without the inverted fair value gap. Although if it's there, that's a nice bonus. But I'm going to go over literally 9 examples of this RFK range fake out kill shot strategy working within just the last few months of market action. And it's really crazy the results it gets. So I'm going to talk about a few characteristics of it and then how to spot it. Okay. So the first one is MU. I've talked about this in other videos, but essentially we have this very wide range. We have this breakdown, and the key with the F, the fake out, right? So this is the R, and it's just a very tight and obvious range. So as you can see with the F, which is the fake out, and I want to clarify, guys, when I use this to swing trade stocks, it's almost only to the upside. So I'm only longing using this method. Yes, shorts can work sometimes, but the market is rigged to go up. It's gone up over time. If you just look at a SPY chart, right? We'll add it on here, and you look at it from a 3-month perspective. Does that look like shorting has ever given a real edge? No, it has not. So for that reason, I'm almost exclusively longing stocks with this strategy. However, if you find an A+ obvious short setup, it can work. But so with these, what you want, the uglier the breakdown, the better. Like the uglier the breakdown looks, the better. Look how ugly this candle looked on March 30th of 2026. It looked awful, right? It looked like we were just going to dump down to hell. Okay. And that's actually something you want to see. Now, I said that a fair value gap is not required in this strategy, and it isn't, but it's nice to have one. So you want to zoom out to the higher time frames, right? If you're swing trading, you typically want to enter on the 4-hour or daily, but have like a weekly and monthly context behind it. So the clear context with this is that memory stocks like MU were leading. So you want a little bit of narrative on the sector, and that's where you have to pay a little more attention than with futures, right? Where you're just trading ES and NQ. You're just paying attention to the technicals of that chart. With this, you got to be a little more aware of what's hot in the market. But we have this very ugly breakdown that just so happens to be occurring right down into a monthly bullish fair value gap. And so what happens? We have the very ugly breakdown. We start to work on invalidating it the next day, making half of it back. And then we gap up the day after beyond the previous breakout high or the breakdown high. So we overtake the high of this candle that looked super ugly, which is kind of the confirmation. And then we gap down, we come all the way back up, and that's kind of the sign, okay, we're ready for takeoff, and boom, right back up to all-time highs for a 30% gain. Once the confirmation's through, if you were nice enough to snipe the absolute bottom, you got about a 45% gain, but it continued to run and run and run. And so even if you waited for the confirmation, which was about 15-20% off the lows of this move, right? So you're getting in late, kind of. You still made, over 120% in like a month from trough to peak. So crazy, crazy example right there. Next up, let's do AMD. This was just today. So AMD has been a very strong stock, right? All the chip companies have been very strong. So understanding that is helpful. What happened the other week? We had a monster earnings report, and the stock ripped almost 20%, and it left a very big gap on the daily chart, okay? So one thing with these gaps is that they're a very good signal. Any gap that gets created on earnings is a huge signal because it's almost always either going to fill fast, to the downside or serve as a launch pad. So when it started melting through a little bit in the morning yesterday and then wicked right back up, and closed a reversal candle defending the gap, right? And showing some strength, I actually hopped in some calls, some 500 calls for June 18th. They were very far out of the money. I called them out in my free trading Discord, which, by the way, is completely free. No credit card, no email, no nothing. It's me, several other people in there giving banger plays day after day. And we hit this for over 100%, right? 110%. I took some trims at like 65 this morning, held on to a bit of the position, and it's currently up over 100% in one day because of this RFK strategy, right? We have the range, okay? We have the fake out, which looked bad yesterday intraday. If you go back to the 1 hour chart, it looked pretty bad right here, right? Boom. Get bought back up. We recover, put in a reversal candle, and what do you know? An 8% move up the very next day, okay? So that's the RFK on AMD that we just hit, 100% on some calls, and they could very well run a lot more, right? It might not be done. Intel did something similar. This was a pretty long range. So this was, between January and March, we had this breakdown right here, right? This fake down, okay? And what happens? Well, we sweep all of these lows in this range. Oh no, we're breaking down. We close a candle at the lows. So, the more bearish the candle on the breakdown looks, you really want to be on watch, because if we do something like this the next day where we don't only not make a new low, but we just completely gap up off that low and close all the way back above this candle, right? Pay attention to this sequence, okay? Like, I'm going to zoom in and pay attention to this structure right here. The same thing essentially kind of happened on MU, although it took 2 days on MU and 1 on Intel. So we have a really ugly looking breakdown, right? On MU and on Intel. And what happens? Instead of making some new lower close the next day, we work our way back up, all the way back above where this breakdown started. That's the reversal confirmation. And then the next day, to make matters better, you gap up again. To me, this right here, when we closed above it, is enough confirmation to go long. But even more so right here, once we get a second gap up and start to really even close over this recent range too. So pay attention to moves like this, right? And so with MU, like I said, same idea happened, just it took 2 days instead of just 1. But pay attention to the characteristics of this. It's the same thing I'm going to show you with Bloom Energy right here. Literally the same thing. If you can pay attention to these, and that's why I tell people in my Discord, like, when you see it looking like this, and it looks like a breakdown, like, it could be a breakdown, right? That's the thing. You don't want to enter here. You don't want to try to be a hero and bottom tick, because what if the next candle, looks like that? Then you screwed up and you're down a lot. So wait and just see what happens, because when you see a setup like this, especially on this Bloom setup where we were running down into a weekly bullish fair value gap, right? This is the F. This is the R. This is the F. At least you think at this point, right? If you're looking at this in real time. So what do you want to do? Do you want to get in here? No. You want to wait and see what happens the next day. So what happens the next day? Breakdown completely invalidated. And once again, this same structure where we not only don't make any new low or close below, but we gap up and overtake the open of the breakdown candle. It's very simple. And that right there is your confirmation. Once again, I've shown you 3 exact scenarios of this. The AMD was a little different, but it still was a good example. But I've shown you 3 exact scenarios of this in a few minutes that all happened this year. And you're not tapped into this yet. And so look what happens. We stay around like, few days in this range, chop around a bit, and then boom. Gap, over 100% if you got in on that confirmation in just about a month and a half. All right. It's really simple. You can say the same thing about Google. This one's a massive, like a really clean version, because this one, you even kind of get that inversion fair value gap that I like to see on the lower time frames when I'm taking scalp trades. You get the breakdown. You get a monster reversal that starts with a gap up. When the reversal starts with a gap up, that's an even better sign on the daily chart, right? So you get the idea. Google did the same thing. If you got in, maybe say you waited until we overtook the previous low. So you waited until like this day right here, April 1st, you got in, you're still up 30% on a stock like Google that usually moves a little slower. That's pretty damn good, right? If you got calls, you're probably up multiple hundreds of percent if they had a few months on them. Same with Rocket Lab, right? I could go on and on and on, and I will for the 3 more examples just to nail this point in your heads. Like the range fake out kill shot is the best swing trading model in the market. What happens? We break down. It looks ugly. It looks horrible. Oh no, Rocket Lab is going to die, right? That's what you're saying on March 30th. And then we gap up. And so what's that your sign to do? It's your sign to go long. And that would have been a very smart idea because you would have been up over 100%. Same with AAOI, right? It's an unbelievable example. This one, we have an even better, confirmation because right here we have a breakdown. What looks like a breakdown. We're trading into a weekly bullish fair value gap while we do it. And we actually chop around this area for a few days. So at this point, I wouldn't enter yet because even with this lower wick, like we're still making new lows. This isn't a good enough daily close here to go long, right? There's this bearish daily fair value gap still. So at this point, you're still 50-50. And then what? We gap down and we engulf, right? A bullish engulfing candle. That's your sign to go long right there. And it absolutely rips right off that. So the confirmations don't lie. So even though it looks like you're getting in late because this was a plus 30% day, trust me, if the chart's telling you it can still go higher, it probably will. Because once again, you could say, I'm not getting in now because even though this confirmation looks amazing and looks super bullish, it's up 30% today. Okay, well, guess what? In the next 5 days after that, it was up another 50%. And that's if you did shares. You could have done options. You could have done a lot of things. So pay attention to confirmations like this. One thing I always tell people, the one thing more bullish than a breakout is a failed breakdown. Get that in your head. The thing that's more bullish than a failed breakout is a failed breakdown. And you can see the same thing with TSM here, right? Looked awful. What happens the next day? Boom, massive gap up, retake the range. Rest is history, right? United Healthcare did something similar as well. This was a pretty clean range, right? We dump down, V-shape, massive gap. The strategy is impeccable. It really is. And I would urge you guys to just back test it on your own. Like, don't immediately copy my strategy just because it looks good. There are so many examples. I could have gone over 100. I don't want to waste your time. But back test it for yourself. See if you like it. Paper trade it. Do what you want to do. I'm actually going to have a video on back testing on TradingView coming up fairly soon here, just because there are backtesting platforms that are paid, but like a lot of people don't want to use them. So I'm going to talk about that in a upcoming video. But either way, understand the importance of patterns like this. The RFK, the AMD, whatever you want to call it, it is the best swing trading pattern, or really system. Pattern is kind of a dumb way to put it because there's more than just blindly trading a shape, right? It's the best trading system for swings I've ever used. And I've tried many, right? I've been trading for over 6 years now. Believe me, this is not my first rodeo. I've tried failing methods. I've tried winning methods. I've tried methods that win a little bit more than the winning methods, like this one. Trust me, guys, you want to pay attention to this. This isn't financial advice. This is just educational and informative. And I do hope that I can help some of you improve your skills as swing traders, because at the end of the day, a lot of people try to play prop firms. A lot of people do this, that, and the next thing. But we are in an AI boom right now. And there are a lot of companies that stand to benefit off that boom. And it's already happening. If you just look at the market every day, there's a lot of tech stocks that are bright green because people want to be exposed and invested into one of the greatest technological shifts, probably the greatest technological shift. Yeah, not probably, definitely in human history. And so with that all said, if you can catch setups on leaders that look weak, but it's fake, like we have with MU, like we had with AOI, right? All of these really good AI related companies, if you can catch those setups, you're going to be printing. And the best part about it is that it's kind of stress-free relative to futures trading, in my opinion, because, you got to be active on the prop firm. You're watching every tick. You got to manage the position. With these, you can just set alerts on TradingView, say, oh, it hit. My confirmation's there. Let it ride. lock it away in your brokerage, forget about it, whatever makes you feel best. That's kind of what I do. But yeah, I hope this video helps some of you guys. Like I said, join my free trading Discord if you want to see me take setups like this and explain them and help educate you guys on what I do. A lot of cool people in there. It's over 2,000 members now, which I'm also super grateful for. So I appreciate you all for watching. I'll catch you in the next one. Peace.